Happy Friday to you. I'm Marlon Bowling with you. I hope you're having a good end of the work week here. We look forward to the weekend coming up here after we get done here today. And we'll take a look at this overnight trade. We had a little bit of a higher tone, as Tammy mentioned earlier. Everything turned upward in the grain markets overnight. Let's take a look with our quotes provided by bar chart here. Let's go to the corn. And on the September contract, when we came across the finish line here this morning, we had the September corn 6 higher at $4.79 per bushel, and that was within about a penny and a quarter of its high, the overnight trade. December corn 5 1/4 higher at $4.91. Now on soybeans this morning, pretty strong gains here, double-digit gains all across the board. We have September 15 1/4 higher at $13.52. November 15 3/4 higher this morning at $13.45 3/4. Now let's look at the wheat market in Chicago. We'll go with September. It's 12 1/2 higher at $6.02, and you have December 13 1/4 higher at $6.28 1/2. So definitely a stronger market there overnight. And let's take a look at Kansas City wheat. And on the Kansas City market, we had the September 9 1/2 higher at $7.42 1/2. And December 8 1/4 higher at $7.49 3/4. That's about almost 8 cents off of our earlier low of the overnight trade. And looking at the Minneapolis market here on spring wheat, September 5 3/4 higher at $7.93 1/2. And we have December now 6 1/2 higher at $8.10. Meanwhile, in the cotton market, we finished up, well, we're currently, I should say, trading December cotton 52 points higher at $84.13. So it's rebounding a little bit. It actually dipped down as low as $83.57 in the overnight trade, and it's coming back off of that right now. Now, I just wanted to mention that we did have a new overnight export sale that we can add to the list. It's a little bit different this time. This time, USDA says we sold 112,000 tons of corn to Mexico. So we can thank them for that business. Generally, they don't buy things in round numbers, but they did this time. And a nice sizable amount here for the corn. We've been lagging on corn sales here lately. I want to bring in Brian Hoops, president of Midwest Market Solutions. He's in Springfield, Missouri. So, I mean, that definitely won't hurt the cause, will it? It's nice to see a corn sale racked up here.
Yes. Good morning, Marlon. Good to see corn. We had a couple sales last week. We saw one this week, and only one soybean sale, though it was fairly large, over 416,000 metric tons. The job of the market here is to find that price level that's going to stimulate demand. And it's a struggle when the dollar is as high as it is. And in fact, it's strengthening again this morning as more poor news out of China trickles in. The economic news data is really negative this morning. And so that's really weighing on our stock market. It's, probably going to keep strengthening the dollar and potentially hurt some of our other commodities. So, grains, metals, crude oil markets, those will be stymied by this higher dollar. So it is good to see that Mexico is coming into the market and finally purchasing some of the corn products. I think as we stay below $5, we will find more demand. And even as we try and find our harvest lows, that demand should improve and should pick up. So, if we rally too far, we're not very price competitive. There's plenty of crops out there, especially out of Brazil and their second corn harvest from, at least from now and through the early start of our harvest.
I was talking on a podcast a little bit ago, and I was pointing out the fact that this is going to be interesting when you have temperatures in the 3 ice states next week expected to be either at or near 100 degrees, right when the Pro Farmer fall crop tour is underway. Oh my gosh, that sounds like a lot of fun, walking through cornfields in 100-degree heat all day long for 4 days. But that ought to be interesting to hear what we have coming out of the fields at that point.
Right. A lot of years they're walking in rain, not extreme temperatures, or in fact, probably some record temperatures in a lot of areas. So yeah, it will be interesting. It's going to be very hot for those participants this year. And if you had good rains over the first 2 weeks of August, consider yourself blessed. You've probably got some soil moisture these crops can draw off of, and they may not be hurt too bad. If you haven't, if you've missed out on these rains in the early part of August, it is really going to stress your crops. And there is no doubt going to be some of those areas, and that's what that market is trying to put in a premium and find that price level that represents, this additional crop stress. Beans, I think, will be hurt the worst, especially some of these double crop soybeans that maybe haven't had as much moisture as some of the other areas, and that's what's really going to be stressed and probably hurt yields.
If you look at a November soybean chart, does this present maybe an opportunity that producers ought to think seriously about pouncing on before harvest gets underway? Or do you think this is just the start of a leg higher here?
Yeah, we've around that $13 mark, that's when the demand started to pick up and there was some buying opportunities there. Now we're up into the 13.45 range, which is some resistance, and we kind of stalled out there overnight. There is a gap above us, and it's like in the 13.79, 13.80 range, somewhere up in there. I think that's a very logical point this market may try and rally towards. Typically, we see the market rally into around Labor Day and then start to sell off. You can't hurt the crop very much after that Labor Day timeframe, and really it's just it's frost concerns, and with the maturity of corn going to be pushed with that heat this week, I think we eliminate a lot of those concerns about an early frost in the majority of areas. So there's going to be some opportunities, I think, for producers here between this price level and up to the 1370s. If you need to make additional catch-up sales, to go ahead and do that. These, again, the purchases we've seen of soybeans the last 2 weeks, those are all for October through February delivery. Easily can be canceled if the market turns lower and China backs out of these purchases. They'll buy them at cheaper levels.
One thing I did note, of course, a hurricane in the Pacific, Hurricane Hillary, turned into a major hurricane overnight, and or will be anyway, and headed toward Los Angeles. What a weird deal that is. It could maybe throw a little moisture up into the southwestern U.S. That would be interesting, and maybe add to that monsoon flow toward the plains. But I just wanted to point out, I noticed overnight where NOAA, the Hurricane Center, said that there's now finally a couple of developing storms coming off the coast of Africa. They give them a 30 or 40% chance of developing into something, but they could be maybe a week or 10 days away before they ever get here. But just something a little seed to plant in the back of your mind that maybe things are starting to turn. Okay, we'll come back and talk a little livestock here in just a minute. All right, we're talking with Brian Hoops of Midwest Market Solutions. Well, now we want to talk a little about this livestock market situation here. Brian, anything shake loose out there in the plains yesterday or not?
Yeah, there has been some cash trade, Marlon. It started off at 179 in Kansas. They bought some cattle at that level. That's about $1 lower than the bulk of last week's trade. And then after that, Packers pulled their bids back to 178, and they did buy a few head there. So for the most part, live trading the Southern Plains, $1 to $2 weaker. Kind of the same situation on a dress basis in Nebraska. We started off early in the week, steady money, and then it has softened from there. And we're probably $1 to $2 lower, maybe in some instances $3 to $4 lower dressed, in fact. So cash trade has softened as the week has gone on. There's been some movement ahead of next week's extreme heat. Now, we also saw cutout values last night turn sharply higher. They were higher at midday, and that produced a little bit of a temporary rally. They were over $5 higher last night in the choice, and so the packer margins are going to be healed pretty quickly. And with the cattle on feed this afternoon, maybe we see some short covering in the futures. We've closed lower several sessions in a row here. We're due for some sort of a bounce, and there's a lot of disparity between the placement numbers on some of the surveys I've seen. They're looking for anywhere from maybe 4 to 6% less than last year. Just kind of depends on how many of those cattle were retained and kept on grass versus being placed in the feedlots, and that's probably where the wild card lies in that report this afternoon.
All right, well, thanks for pointing that out. Let's revisit how we finished up yesterday in our livestock trade. Let's go to the big board, and our quotes from bar chart show live cattle finished up weaker across the board. You had October closing at 178.32 yesterday. That was down 95 cents. The biggest loser contract would have been December. It was down $1.05 at the close. On the feeder cattle trade, well, it was a lot similar, maybe a little more to the downside. You had September down to 187 at 247.12. October was down $1.65. Everything was over $1 lower on the feeders yesterday. And we wrapped up lean hogs on the plus side yesterday with the October up 97 cents, and the December contract was 82 higher It did manage to work its way up to $72, but boy, it is still lagging badly behind all the other contracts. It's got a little work to do to try and catch up. It's more than $7 under the nearby October contract. Brian, great stuff. Thanks for helping us out here this Friday morning. You have a good weekend out there, and we'll talk with you next week. Brian Hoops of Midwest Market Solutions in Springfield, Missouri.